What's up, guys? This is Manoj Paptani. I welcome you all on behalf of the Edupedia world. It's been a wonderful day outside, and I'm sure that you guys must be enjoying your life to the fullest, guys. I hope you guys are in the best of your health and spirit while watching this video. Guys, this is the fifth video presentation in which I'm going to discuss a few more questions relating to the topic of leasing decisions. By now, we have already covered our four presentations. Out of the same, two were solely dedicated towards theoretical concepts, and two were basically dedicated towards the past year examination questions. So this is going to be the fifth presentation relating to the topic of leasing decisions. So stay tuned and understand what do I need to offer with respect to this particular presentation to you guys. Let's mark the beginning of it with the question, and which is this. Engineers Limited is in the business of manufacturing nut bolts. Some more product lines are being planned to be added to the existing system. The machinery required may be bought or may be taken on lease. The story till now is that there is a company with the name of Engineers Limited. It's into the business of manufacturing nut bolts, and they are planning to go for some kind of extension into their business. So they want to purchase and acquire a machinery. Two options which are available is, one, they can either buy the machine or they can take it on lease. The cost of the machine is going to be 20 lakh rupees, and it's going to have a useful life of 5 years with the salvage of 4 lakh rupees at the end of fifth year. Also, it has been mentioned to us in the question itself that we need to consider short-term capital loss and gain for income tax as well. So guys, this is some kind of new point with respect to this particular question. The full purchase value of the machine can be financed by either bank loan at a rate of 20% interest, which is going to be repayable in 5 equal installments, falling due at the end of each year. Remember guys, mark this line in your mind that the repayment is going to be made only and only after the end of the year, in 5 equal installments. Next comes, alternatively, the machine can also be procured on 5 years lease, year end lease rental being 6 lakh rupees per annum. Again, it has been mentioned in the question itself that the lease rental, whatever amount you'll be paying in this question, it has to be made at year end, and the amount will be 6 lakh rupees per annum. The company follows the WDV method of depreciation at the rate of 25%. WDV has to be implemented at the rate of 25%. SLM is not available in this question. So we need to do a lot more work as compared to what we could have done in case of SLM method. WDV in itself requires the preparation of that schedule. So we'll prepare that, don't worry. Next comes, the company's tax rate is going to be 35% and the cost of capital will be 14%. We are supposed to advise the company which option should it choose, whether they should go for leasing option or they should go for borrowing option. Assess the proposal from lessor's point of view as well, examining whether leasing the machine is actually financially viable for him or her at 14% cost of capital. Detailed working notes should be given. That has been mentioned in the question itself. So here we are not just supposed to tell the person whether they should go for lease or borrow, but also at the same time we also need to evaluate this particular proposal from lessor's point of view, whether he should actually give the machine or lease or not. Only and only if in case the cost of that machine is going to be met by the lease rentals, only then it is supposed to be provided on lease basis. Otherwise, it's going to be disadvantageous for lessor. Are you guys thorough with the kind of question what the question is demanding in this question? Absolutely guys. Let's go ahead with the solution part and understand how we should prepare and present this particular question in the examination. So guys, number one thing, first thing comes first. We have been told in the question itself that the cost of financing will be 20%. It has been mentioned in the question itself that full purchase value of the machine can be financed by bank loan at the rate of 20%. Okay, number one thing guys. Secondly, since I know that the company's tax rate is 35%, so what is going to be the actual costing of finance after tax that will be paid out of my pocket? It has to be 13%. 20% and less 35% tax out of it, we'll get a figure of 13%. Now, let's go ahead with the first alternative. I have mentioned here the first alternative as the leasing alternative. What is going to be the present value of cash outflows under leasing alternative? I made a tabular presentation of 4 columns. Number 1, year rent. year rent. Number 2, lease rent after taxes per annum. Number 3, present value interest rate factor annuity at 13%. And finally, the total present value. Guys, we have been clearly mentioned in our question itself that we are supposed to pay 6 lakh rupees per annum if in case we opt for lease rentals. So this is something which is before taxes. But since lease rental is in itself a tax deductible expenditure, so definitely we'll get an opportunity to save our taxes out of it. So the tax saving will include an amount of 2,10,000. Why? Because the taxation rate is 35%. So you have to pay the lease rent after taxes per annum of merely 3,90,000 after adjusting a tax of 35% out of 6 lakh rupees. Year which needs to be counted in this particular case will be the entire 5 years, 1 to 5. The present value interest rate factor which we calculated in the first part and above of this presentation, 13%, it has to be evaluated for next 5 years. So the present value interest rate factor annuity at 13% for 5 years, the total summation of it will be amounting to 3.517. This can be easily obtained by you in your calculator itself. You just need to divide 1 from 1.13, then 1 divided by 1.13 to the power 2 to the power 3 to the power 4 to the power 5. And then you need to get the summation of all these figures, which will be 3.517. If you multiply the same with the lease rentals after taxes per annum, you will get a figure of present value, which is 13,71,630 rupees. And this is going to be the present value of cash outflows if in case you choose to go for leasing alternative. Perfect, guys. Shall we proceed further? Cool. Now, this comes the second part. We will discuss it later on, but before that, we need to understand what different kind of working notes should be implemented in order to solve this question. But before going towards the working notes, let's read this first line, which is essential for you to keep in your mind. EMI. EMI is gonna be equal to rupees 20 lakh divided by annuity for 5 years at the rate of 20%. So guys, coming back to the question in order to make you understand, here it is being mentioned to us that the cost of machine is gonna be 20 lakh rupees and it is gonna be having a useful life of 5 years. Also, at the same time, we have been told that the bank loan will be provided to us at the rate of 20% interest. So what we need to evaluate is this EMI. What should be my annual payment that I need to make? This annual payment is something which will include the segment of interest as well as principal repayment. If I need to pay the principal repayment of 20 lakh rupees in the next 5 years, I need to get the annuity of next 5 years at the provided percentage. In this particular case, the annuity percentage for 5 years is going to be 20%, which is the bank financing interest loans amount. So the same will be taken as a denominator, the total annuity of the same, which will amounts to 2.991. All we need to do is we just need to divide 20 lakh, which is the cost of that asset, with the annuity factor of 5 years at the rate of 20%, and the figure which will come out to be, that is the loan installment. It has to be rupees 6,68,673. Now the catch is this 6,68,673 also includes your interest as well as your principal repayment. So this is your annual payment that you need to make each year as installment. Perfect, guys. Keep this in your mind. This has already been discussed by us in my last presentations as well. So you need to keep this in your mind, how to compute the annual payment first of all. And that is pretty simple. All you need to do is just divide your cost of asset from the annuity which is available for number of years at the required percentage. That's it and done. Now coming to the working notes part. So the working note says number 1 is the schedule for the debt payment. Guys, this has been divided into 6 different columns. Number 1 column belongs to year end. What is the number of year? Number 1, number 2, number 3, number 4 and number 5. Next comes in the column which is opening balance. What has to be the opening balance for your principal amount? Next comes the third column, which is the interest at the rate of 20%. Next comes repayment. What's going to be the repayment amount? Followed by the closing balance. What's going to be the closing balance of your principal outstanding? And finally, the kind of principal repayment that you are making out of that loan installment. These are different 6 columns which needs to be taken care of in order to get the schedule for debt payment. Let's come to year 1. It says opening balance of 20 lakh rupees. Remember guys, the cost of the machine was 20 lakh rupees. So that was the opening balance of the loan. Now it has been mentioned to us in the question itself that the interest needs to be implied at 20% of the principal amount balance which is remaining. Okay. So 20% on 20 lakh comes to 4 lakh rupees. Now, since it has been told to us that in my last part I told you that the loan repayment that we are doing, basically the installment amount is 6,68,673. If this is the installment amount and out of the same interest amounts to 4 lakh rupees, then what remains as my principal amount? That is nothing but 2,68,673, which has been presented to us in column number 6. Now, since this payment includes a principal amount of 2,68,673, now this will be subtracted from the opening balance. Now, the remaining closing balance of my loan outstanding at the end of year 1 will be 17,31,327. Are we guys clear with this? Perfect. Now, the same closing balance of year 1 will be amounted as opening balance for year 2. Now, come to column number 2. You can see at the year end 2, the opening balance is the very same thing which has been mentioned in the closing balance of year 1. That is 17,31,327. Now, the interest of 20% has to be calculated on this amount, and that will cost us as 3,46,265. Now, since again the repayment is going to be the same amount, which is 6,68,673, and if out of the same interest amounts to 3,46,265, then the remaining one will be accounted as the principal amount, which is going to be 3,22,408. And once you'll subtract the same from the opening balance, which was 17,31,327, you will get a closing balance of 14,08,919. And this will be the closing balance outstanding at the end of year 2. Similar exercise needs to be repeated for year 3 as well as for year 4. And once you are done with it, you'll see that by the end of year 4, you are having the closing balance outstanding in as 5,57,763. The same will be accounted for as the opening balance of year 5. Interest at the rate 20% has to be made on that opening balance of 557,763, which will be 1,10,910 rupees. And repayment needs to be made, which is 6,68,673. That is the annual repayment which needs to be made. And if out of the same is 1,10,910 as interest, then what is going to be the remaining amount? The remaining amount is nothing but the principal repayment, which is 5,57,763. This was all about the schedule for debt payment. I hope you guys are very much clear with each and every kind of aspect that I'm showing you up clearly over here. Just remember and keep this in your mind, guys. Tabular presentation is the best presentation, and definitely with the help of it, you'll be able to score utmost up to mark 10% marks in this examination. Coming to the second point, which is the schedule for depreciation. What has to be taken care of while calculating the depreciation? Remember, it has been told to us in the question itself that depreciation will be amounted in the method of WDV and not SLM. The company follows the WDV method of depreciation at the rate of 25%. It has to be shown here itself. Year 1, year 2, year 3, year 4, year 5. That is column number 1. Coming to column number 2 is the opening WDV. Coming to column number 3, it will be depreciation. And finally, coming to column number 4, it's going to be closing WDV. Opening WDV, which has been mentioned to us in the question itself, which is the cost of asset, comes to 20 lakh rupees. WDV has to be taken care of at the percentage rate of the depreciation rate is 25%. So 25% of 20 lakh rupees amounts to 5 lakh rupees. You will get a closing WDV as 15 lakh. The closing WDV of year number 1 will be amounted as the opening WDV of year number 2. The same has been transferred to column number 2, if you can see. Now 25% depreciation will be accounted and amounted on 15 lakh rupees. You will get a figure of 3,75,000. And once you will deduct the same amount from 15 lakh, you will get the closing WDV, which amounts to 11 lakh 25,000. And the same 11 lakh 25,000 closing WDV of year number 2 will be the opening WDV of year number 3. Similar exercise needs to be repeated for year number 3 and year number 4. And finally, what will happen in year number 5 is there will be a opening WDV of 6,32,812. You will apply 25% to it. You will get the depreciation for year number 5, which amounts to 1,58,203. Once you'll be subtracting the same amount from opening WDV, you'll get the final closing WDV, which is 4,74,609. Now guys, here's the catch. Before moving into the segment closure part, you need to understand that you need to remember this figure, which is 4,74,609. This will be helpful while you'll be like getting the present value of the tax saving on capital gain and capital loss. Remember, there was a catch in this question. There was new point, which is you also need to take into account, you need to consider into account the present value tax saving or tax loss on capital gain or capital loss, which is going to happen if in case you are selling your machinery. So since here the closing WDV of machinery is 4,74,609, we need to consider the same in our major final segment, which is going to be this. Coming back to the main solution part, year number 1, 2, 3, 4 and 5. The second column belongs to the loan installment. The third column belongs to the what amount of tax advantage do we get on interest. The fourth column is going to be what amount of tax advantage do we get on depreciation. And finally, after settling both these things, you'll get the net cash outflow. You'll have to multiply the same with the present value factor of that respective year. You'll get the present value of the entire totality amount with respect to what outflow did you had to make and what is the present value of that outflow. Shall we proceed further with this particular stuff, guys? Let's understand this particular table, which is the major thing, which is the cash outflow amount calculation. Year 1, 2, 3, 4 and 5. Next comes the loan installment amount. We have been calculated this thing that the loan installment amount, the repayment for each particular year is going to be static, and which we calculated in as 6,68,673 rupees. Now, since we have already taken care of the working notes, guys, let's come to this particular slide, which we just completed, and which was the interest. You can see in schedule number 1, we have mentioned that the interest amount at the rate of 20% for these 5 years is 4 lakh, 3 lakh 46,265, 2 lakh 81,784, 2 lakh 4,406, and finally 1 lakh 10,910. This is the interest amount. Okay, you have shed out of your pockets this particular amount, but are you like able to get the complete tax saving on this? Absolutely not. It has to be at the taxation rate. So all these 5 years interest will be multiplied with 35%. 35% is a tax rate. So you will get a tax advantage of 1,40,000 in year 1, 1,21,195 in year 2, 98,624 in year 3, 71,542 in year 4, 38,819 in year 5. This is the tax advantage on interest. Now coming to the tax advantage of depreciation. In schedule number 2, we have calculated the depreciation as 5 lakh, 3 lakh 75,000, 2 lakh 81,250, 2 lakh 10,938, 1 lakh 58,203 for these 5 years. Again, similar exercise needs to be repeated, and you need to multiply the same with 35% because that is the amount with which you will get the tax saving. So once you multiply 35% for 5 lakh, you will get a tax advantage of 1,75,000 in year 1. Similarly, for year 2, it's going to be 1,31,250 for year 2, 98,438 for year 3, 73,828 for year 4, and 55,371 for year number 5. All you need to do is, since you have already obtained the installment amount at the first go, also you have noted down the tax advantage that you'll get in respect of interest and depreciation. Why? Because these two are tax deductible expenses. So after adjusting both of them from the installment amount, you will actually see that you have actually foregone out of your pocket merely 3,53,673 rupees in year 1. That is your net cash outflow which you will make after adjusting the tax advantage for interest and depreciation. Similarly, for the year 2, it's going to be 4,16,230, 4,71,611 for year number 3, 5,23,303 for year 4, 5,74,483 for year 5. All you need to do is now you just multiply the same with their respective year's present value factor. You'll get their present value. Total outflow will be 15,98,464 rupees. Now, this is something which I've already shed from your pocket. Also, since you'll get the benefit of salvage value because you have already owned the asset, you are the owner of the asset. So that salvage values, present value benefit will also be accounted for in this question, and that needs to be used in order to decrease your present value outflow. Why? Because this is one of your benefit. So you will subtract the present value of the salvage value, which is 4 lakh rupees. Salvage value has been mentioned to us in the question itself, which is 4 lakh rupees. You'll adjust the same with the respective year's present value factor, which is 0.543. That is the present value factor for the year 5. You'll get a figure of 2,17,200 rupees. You'll subtract the same with the total amount of present value outflows, which is 15,98,464. You'll get a figure of 13,81,264 rupees. Now, remember guys, I just mentioned you a few minutes before that you need to take into account that figure, which was the last year's WDV, which came to be 4,74,609. The same will be used now. Since we all are aware of this fact that the amount, the WDV, latest WDV amount is 4,74,609, and since we have sold this machine as and get the salvage value as 4 lakh rupees, here we actually had the loss. We had the loss of that balance WDV, which is 74,609. The same will be adjusted against the taxation rate of 35%, which is the company's applicable tax rate, and the same will be multiplied with the present value factor for year number 5. You'll get it as 0.543. After adjusting all these things, you'll get the present value of tax saving on short-term capital loss as 14,179. So technically, the net present value for the cash outflow finally out of your pocket will be 13,67,085 rupees. I hope you guys are pretty much clear with each and every step that I mentioned you in this particular alternative, which was borrowing option. Clear? Thorough guys? Cool. Let's move ahead with the second part. We need to now evaluate whether the lessor should go ahead with the leasing option or not, whether they should provide the machine on lease or not, whether it's viable for them or not, which is this evaluation from lessor's point of view. Number one thing, I have divided this particular segment into 6 different columns. First column will be about the particulars, what I have adjusted, and the rest 5 particulars belong to the number of years. Number 1 year, number 2 year, number 3, number 4, number 5. First row will come in as the lease rent. Lease rent is gonna be static for all the 5 years. It's gonna be 6 lakh rupees for each of the year. Out of the same, I'll deduct depreciation. Depreciation is one such expense which is gonna save my taxes definitely. So it's a tax deductible expense, so I need to take it into account. Why? Because I have not basically paid for any of the amount as in depreciation is involved. So depreciation is a tax deductible expense, plus it is also accounted for. You can account for the same in your profit and loss account. So I'll deduct my depreciation, which I calculated in my last segment as 5 lakh for year 1, 3,75,000 for year 2, 2,81,250 rupees for year 3, 2,10,938 rupees for year 4, and 1,58,203 rupees for year 5. I'll get the earning before taxes for each of the 5 years as 1 lakh, 2,25,000, 3,18,750 rupees, 3,89,062 rupees, and 4,41,797. Now, after obtaining this EBT, earning before taxes, I'll adjust the same from the taxation point of view. I'll subtract taxation at the rate 35% from each one of them. I'll get the earning after taxes as 65,000 for year 1, 1,46,250 rupees for year 2, 2,07,187 for year 3, 2,52,890 for year 4, and 2,87,168 rupees for year 5. Now, since we all know this, guys, that depreciation is considered as a tax deductible expense. However, having said that, that is something in case of which we don't need to shed money from our pocket. Depreciation is not a cash deductible expense, it's a tax deductible expense. So since we didn't have to spend any amount of cash while getting the depreciation in our books of accounts, we need to add back this depreciation in order to take care of cash inflows. So whatever kind of depreciation we deducted in row number 2, we'll have to add back the same to earning after taxes. And once we do that, we'll get the net cash inflows as 5,65,000 for year 1, 5,21,250 rupees for year 2, 4,88,437 for year 3, 4,63,828 for year 4, 4,45,371 for year 5. The same will be multiplied with their respective years present value interest factor at the rate of 14%, and then you'll get a present value of the inflows as 4,95,505 for year 1, 4,841 rupees, 3,29,695 rupees, 2,74,586 rupees, and for the 5th year it's going to be 2,31,148 rupees. This is going to be the amount of entire present value of inflows. What we need to do is we need to aggregate the present value of all these cash inflows, and it will amount to 17,31,775. Again, since I am the lessor in this particular case which we are talking about, I will be treated as the owner of the asset. So who is the person who will be getting the benefit of having the salvage value? It is only me who's going to be taking the benefit of salvage value. Why? Because I am the owner of this. So I'll also take into consideration the present value of the salvage value. So the present value of the salvage value is going to be 4 lakh rupees multiplied by this 5th year's respective present value interest factor, which is 0.519. So the present value of the salvage value will account for 2,07,600 rupees. Also, I'll add to the same the tax shelter on short-term capital loss, which was none other than 74,609 rupees, which we evaluated in last slide as well. I'll multiply the same with the taxation rate, which is the benefit 0.35, and the same will be multiplied with that present year's annuity factor, which is 0.519. You'll get a figure of 13,553 rupees. All you need to do is just sum up all these figures: present value of cash inflows, present value of salvage value, and present value of the short-term capital term loss. You'll get a figure which is all cash flows present value in as 19,52,928 rupees. Remember, guys, at the first initial hindsight, what was the cost of the machine? The cost of the machine was 20 lakh rupees. Now, is it feasible for you to obtain something from the market for 20 lakh rupees? And if I'll talk about what amount will you be able to extract as cash inflows, you are getting merely 19 lakh 52,000 rupees. You are getting the NPV loss of 47,000 rupees. So should the lessor go ahead with the leasing option? Should he provide the machine on lease? Absolutely not. Leasing at this rate is just not feasible. It's providing the lessor a loss. Clear, guys? This is how you need to take into account and you need to perform and present these type of biggie questions in your examination. This is going to be one way wherein you can present your answers in best of the health and spirit, and certainly that particular person who is going to check your paper will not get any chance, any opportunity to deduct your marks, and you'll get the same person. Trust me, tabular presentation is going to be one of the best presentations. Clear? Superb, guys. I hope this video was informative for you. I hope this video was knowledge worth sharing. Certainly, so all you need to do is, if in case you have liked this video, do give us a thumbs up on our channel. Do give us your positive comments. Your love is utmost important thing for us, guys. Trust me on this thing. Keep interacting via questions, queries. YouTube media is all there. We are all there to help you and support you. Thank you on behalf of the ADUpedia world. Keep interacting and stay connected. There are n number of questions which are going to happen in your forthcoming presentations as well. Till then, take care and sayonara. God bless you all. Bye.